Hi, welcome to the Market Alert for Monday, the 1st of September 2025. So a big month for bonds and bullion as stocks swing from August angst to September's sloppy seasonals. And I think the stock market is going to get a bit sloppy for the next few weeks. Stocks down in tech-led sell-off, while inline PCE does little to change Fed expectations, which means obviously they're going to cut and brace for another huge negative payrolls revision, green lighting a 50 basis point cut in September. And news, well, the US is closed today. It's Labor Day celebration, so the markets are closed, the cash markets that is, and the government bonds. So the market will have to make its own direction using the electronic session. And then later in the week, everything gets pushed back. JOLTS is normally on a Tuesday, ADP on a Wednesday, and then we've got the non-farm payrolls, which is still out on Friday. So obviously the market looking at this, it's they're saying it's coming out forecast the same, but with all of these this data and statistics from the US, it's all rigged and fiddled, but we'll see. But as the headline says, if we don't get the number that they want, if it's another weak one, then they'll be looking for a 50 point cut in rates. Anyway, let's have a look at the markets from Friday and see what's happening overnight. So starting off with the Dow, the market is sideways at the moment. It's still got an established uptrend, could break to the upside and make a new all-time high. It came close to doing this on Thursday of last week, but failed to do so. But overnight there's some weakness around at the moment, and I'm expecting that to continue. You can see on Friday the electronic market, pre-cash market, moved higher, but then as soon as the cash market opened, the selling entered the market before getting that out of the way and then moving the market to the upside. Yeah, at the moment I would say sideways to lower for the Dow. We'll just actually be below the 5-bar moving average as well. The only caveat is that the US is closed today on the cash market, so the electronic market could push prices to the upside. That's not uncommon for that to happen. And if it doesn't, then you'll probably get quite an aggressive move to the downside. And speaking of downside, the German DAX continues to weigh heavily and move to the downside as well. We've actually broken the support to the left, which you can see on Friday, the market closing below this. They're trying to bring it back up on the overnight, and we are oversold, so there is room for a bit of a bounce there. In the 30-minute chart, wild on Friday, we were down. We were then up, and then we went back down again with the Dow, and then overnight prices have moved higher, but we're not holding at the DP level. We're heading towards the close, and we could be moving towards the low one more time as well there, which you can see there at 23,880, which of course was created during Friday's trading session there, and there was a lot of volume down at that level, and twice it was tested. So bit of support there. Like I say, there's no main cash market for the US to give direction today, so the German DAX also probably sideways to lower. And in the S&P, all-time high from last week, which was Thursday, 6509. The market Friday had a different opinion and is also overnight as well. I think the all-time highs are over for the time being until we get the non-farm payrolls on Friday, and also, of course, the interest rate cut, which is coming halfway through the month. S&P was weak on Friday, managed to trade sideways. PCE numbers reacted positive, and then all of a sudden the cash market opens and down we go. And we're continuing with that at the moment. Need to watch the low on this market for Friday as well. And the same for the FT 100, the 9,359 is done and dusted for the time being. Market waiting for Rachel from accounts with her autumn statement, which is out next month. Again, bit of demand, market rolling over. I would expect this to start trading towards the 50 EMA there. 30-minute chart, well, again, you can see choppy in the beginning of Friday's session. Then we had a rally for the PCE numbers from the US. They were disappointing, the market down, and now overnight prices sideways there as well. So a look at the US dollar's reaction to these PCE numbers. So on Friday, red candle again, and overnight red candle as well. Now we're at an important inflection point here for the dollar. If it breaks this level here, then we can expect stronger than what we've already got overnight metals prices. As I mentioned before in the market alert throughout the summer, when we get to the end of August, September, it's the metals time. And that's exactly what we're seeing now. So let's take a look and see what's happened on Friday and overnight. Well, surprise, surprise, no Smackdown Friday. In fact, I'll go to the 30-minute chart because we started off obviously moving to the downside, and then mid-morning something happened in the silver market. And also, as you can see now, overnight, we've gone up through the $40 level as well. And about time, frankly. $50 is the all-time high from 2011 and 1980. And it's about time. We were way above that level. The suppression, the manipulation and rigging of this market has been unprecedented and has gone on since Nixon took the US off the gold standard on the 15th of August 1971. So looking at the daily chart, you can see we're moving up very nicely there. We put in a high overnight as well, which is 40.51, and the market's currently holding at the 51 as well, which I'm surprised by, to be honest. We can see that it's making the rise in lows. It's gone a bit quiet, but it looks like it's primed to actually take out this level. So the Smackdown Fridays seem to have are becoming a thing of the past. And also the $2 down days that we've seen over the years as well have also become a thing of the past. So the landscape has changed for the metals, and the uncertainty, global uncertainty, geopolitical events, and also the fact that yesterday Putin's mentioned that he wasn't going to be stopping the war is also going to play into the hands of the metals as well. And included in that, of course, is gold, which is making new highs at the moment each day, and the all-time high being 3,500. It's going to sail through this, be a lot higher by Christmas, if not sitting around the 4,000 level. 30-minute chart, again, all of a sudden market took off sideways, and in Asia the market continuing to move to the upside there as well. Let's have a look at the gold-silver ratio, see how that's responding. And in the gold-silver ratio, this is a weekly chart of the gold-silver ratio because I wanted to see where we've got any sort of support, and we actually head down towards 84 for the next level of support. It looks like we're taking out the recent. Let's just have a look at a daily chart and see what we're actually through that, aren't we? Through the local to the left. The low there is 86.075, and we're down at 85, so a good drop in the gold silver ratio there. Right, let's have a look at Friday's trades before I conclude today's market alert. So on Friday, choppy session in the pre-market in the grey area there. The market started to move down, and then prices found support, and then decided, no, we don't want this support. We're going to have a shakeout through the low and down to the S1 before we see the cash market open. And that's unusual because they like to move the market to the upside in the cash market, in the pre-market, ready for the cash market, and this is the opposite of what we've got there. And then we had a quick buy signal. The market stopped at the 200 MA, but then drove through all the way to the close, bringing the market back to the highs that it had managed to achieve in the pre-market session there. So trading sideways to lower, giving back the gains that it made at the opening salvo, and then taking out the low to the left there as well before prices settled. And we had another potential buy signal there that wasn't filled because the stop was hit first, and then we had another sell with the market moving lower. You can see them buying back in here. Just to the left there we have the support, and trying to bring the market back, which they managed just slightly, but this doesn't hold, and prices then retest that level. And then we get into the mid-morning, waiting for those PCE numbers, the market just drifting up and down in a range, and then being brought back with the Dow futures, which you can see there, nice strong move there with the Dow futures, and all the way back as it waited for those PCE numbers, which came out at 130, which you can see there, big spike, and then the market moving higher. and then ready for the Dow, which the market then put in a sell signal. Market moving down to the 50 EMA, trying to hold there with some green buying, but then this is followed by selling coming into the market, and the market trying to find support at that psychological level of 24,000. It fails to do so, continues back through the low and the 200 MA, and of course that was the same thing that happened in the Dow until it found support and then started to move back. And you can see late on in the session that the same thing is happening there for the German DAX. So late on we had a potential sell signal and a buy signal, and the buy signal won on this occasion as they brought the market back to the low, and then we had another quick sell signal to the downside there as well, as prices once again moved lower. So not too bad of a day on Friday, nice bit of volatility there. So let's see where we are overnight. As far as the market is concerned, I'll find the right chart in just a moment, and there we are. So yeah, we can see it as we look at this, we're above the close at the moment, but below the DP means there's some weakness around. Let's have a look and see where the low is. It's not too far away, so there is weakness there at the moment, primarily that the trend is below the 200 MA. And if it takes out the close, then you can expect the low and the S1. And given the backdrop of geopolitical events and uncertainty that's now coming into the market, a bit more to the downside as well. Okay, that will do it for this one. Let's see what the metals do today, see if they can get to $41 an ounce for silver. That will be a first since 2011. As they rigged the market from $50 all the way down to $13 during COVID. One hell of an achievement, but now it seems as things have changed considerably, which is, like I say, about time. And silver is the only market that hasn't put in a new all-time high within the last 5 years, where everything else has just continued to make new all-time highs. Okay, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.